My name is Andreas Antonopoulos. I specialize in Bitcoin. Like most Bitcoin experts and specialists, I've only been specializing in Bitcoin for a very short period of time. I have, however, been involved in computers and programming since I was 10 years old. I've been involved in cryptographic currencies and digital money since the late 80s and early 90s. I was involved with several conferences in the early 90s when at the time cryptocurrencies were very new, and a lot of attempts were made to introduce cryptocurrencies such as DigiCash and various other cryptocurrencies. So I've been involved in cryptography and security for 2 decades now. I specialize in computer security and cloud systems as part of my day job and as a consultant, and I worked in security for many years. Around 2010, being in a startup, having just recently survived the recession, I decided that I'd had enough inventing useless crap for banks and defense companies, and I wanted to do something meaningful with my life. Fortunately, Bitcoin came around, and I've kind of dedicated my professional career to Bitcoin since then. That was September of last year, dropped everything else and just devoted myself full-time to Bitcoin. As of a couple of months ago, I signed contracts with O'Reilly Media, so I'm currently writing the Bitcoin book, the animal book for O'Reilly. I'm hoping you're all going to buy it. And I'm going to pitch it at every opportunity I get. So that's my background. I'm a coder, a hacker, an entrepreneur. I've started 6 businesses. Like most startups, failed most of them, but succeeded enough to keep going and keep starting the next thing. My interest in Bitcoin is not because I'm a libertarian. I'm not really much of a libertarian, at least not in the capital L term. I'm more of an anti-establishment curmudgeon, and I'm sick and tired of people using my money and then basically stealing and rent-seeking and blowing shit up to make more money and not actually improving the world. So that's why I'm involved in Bitcoin. My primary motivation for Bitcoin, which I've made into a slogan, is the other 6.5 billion. That's why Bitcoin is important to me. It's because of the 7.5 billion people on this planet, only 1 billion people have access to banking facilities, banking services, credit, checking capabilities, or any ability to send and receive money internationally. That's not by accident, and it's not because they don't have money, and it's not because they don't have productive capacity. It's because of politics and infrastructure. And my reason for being interested in Bitcoin is because I think Bitcoin can change that. Because simply with the introduction of not even a very smart smartphone, you can introduce banking services throughout the world, and you don't even need connectivity or 24-hour electricity to do so. So for me, Bitcoin is all about taking money from the realm of governments where it's existed only for the last 100 years or so, and freeing it from those controls and corruptive influences, and basically turning money into a technocratic, scientific, mathematical system that exists independent of governments, independent of corporations, independent of corrupting influences, and exists simply as a means that we can all trust and depend on in our day-to-day interactions. And I think Bitcoin fulfills some of those characteristics. I am not sure Bitcoin is going to be the cryptocurrency that wins. I am sure the cryptocurrencies are here to stay. Cryptocurrencies were invented, and once they were invented, they're not going anywhere. They are a significant invention. I think eventually cryptocurrencies will be recognized as probably the most important invention in economics and technology in the 21st century since the introduction of the internet. So cryptocurrencies I would call, in general, currencies that depend on their operation on cryptographic primitives and a common understanding of how the software works. Bitcoin is a very special type of cryptocurrency in that it is the first cryptocurrency that is based on a distributed proof of work principle that is captured in a distributed database called a blockchain. The concept of distributed proof of work is what makes Bitcoin special. Cryptocurrencies, as I mentioned before, have existed since the late 80s. And they all suffered from the very same problem, which ultimately led to their demise, and which is the main problem that Bitcoin solves, and the reason behind its success. And the problem was that while you can use cryptography to establish ownership of a digital asset, you can't prevent that digital asset from simply being copied and reused again and again. You can't stop the double spend. So all cryptographic money systems before Bitcoin use the central third party to do reconciliation at the end of the day, at the end of a period, or at some point. You needed a trusted third party to do both issuance as well as reconciliation of transactions to ensure that no one was doing unfair dealing, double spending within the cryptographic currency. So the major invention of Bitcoin is the blockchain. And what the blockchain did was it enabled a network of distributed nodes to achieve consensus, to agree on the common state of the network, by each proving that they had participated in that network through a system called proof of work. And proof of work is simply like solving a very difficult problem and then proving that you solved it. Let me give you an example. Take a Sudoku. Everyone's familiar with Sudoku. It's actually hard to figure out which numbers fit into the squares, right? It's very easy to check if the Sudoku is right. You can just add up the rows and columns, and if it's right, it's right. Easy to verify, hard to prove, hard to solve. So the proof of work that's used in Bitcoin is exactly the same. It's very easy to verify, it's very hard to solve. What's special about it is that it is as hard to solve as it takes 10 minutes. That's the base. So it's always 10 minutes hard. If there's more computing, it'll get harder, so it still takes 10 minutes to solve. If there's less computing, it's going to get easier, so it still takes 10 minutes to solve. But basically, the main Bitcoin proof of work problem gets solved once every 10 minutes. That is the heartbeat of the Bitcoin network. And what it allows is, it allows the entire network to achieve consensus every 10 minutes on the latest state of the network and the transactions in that network. So every 10 minutes, the entire network achieves consensus on a block and says the transactions up to this point are verified and agreed to by everyone. And then another block of transactions is added on top, which depends on the previous one. And as consensus is achieved on this new block, it actually strengthens the security of the previous one. So you actually build the security of the network as you're going along. To give an understanding of how this works, the amount of computing power it would take today to break Bitcoin in capital terms exceeds $400 million. You would have to invest $500 million almost just to break Bitcoin in terms of being able to calculate the proof of work faster than the rest of the network. With that, you would be able to fool the network for 10 minutes. And it would cost you $400 million. For the next 10 minutes, you'd have to then continue to fool the network and hope that no one noticed. So it's a very robust network from that perspective. I think the characteristic that most appeals to libertarians specifically is the fact that Bitcoin is a fixed issuance currency. It has a predictable rate of issuance that starts off at 50 Bitcoins per block every 10 minutes and then reduces every 4 years. It was reduced in 2012 to 25 Bitcoins. In 2016, it's going to be reduced to 12.5. In 2020, it's going to go to whatever that is. And I'm better at computer science than mathematics and doing calculations in my head.
6.25.
Thank you. If you follow that pattern, in 2140, all of the Bitcoins get issued. And the network will continuously self-balance through that process, so it always takes 10 minutes to issue each block, and each block always gets the same reward, which diminishes. By 2140, you have all of the coins issued. If you work out the economics right now, today the Bitcoin network is running at a rate of inflation of about 2%, which means that there are Bitcoins created about 2% new bitcoins are created every year. The available supply of bitcoins increases by 2%. However, the demand for bitcoins is increasing far faster. And as a result, this creates a persistent, deliberate deflationary effect in this currency. So the deflationary characteristic of this currency is the idea that no matter what, there will be 21 million coins issued. And those 21 million coins will have to grow in value to encompass the value of the entire Bitcoin economy as it stands. And that's not just M0. You have to realize that the Bitcoin economy has M0, which is the liquid Bitcoins that are circulating, but just like any other currency, it also has M1, M2, M3, M4. You can issue off-chain transactions, you can issue Bitcoin that aren't reconciled with the 21 million. You can effectively do forms of reserve, fractional reserve banking with Bitcoin. So the value of Bitcoin is greater than the number of Bitcoin in circulation. Today that puts it at about 1.2 million, 1.3 as of this morning. And if you assume that Bitcoin continues to do well, and in terms of a currency, Bitcoin is doing well as long as it hasn't died, it's technology. If it continues to do well and continues to grow, it has to encompass a bigger economy, and therefore by definition will deflate. So that's the basic concept. That's what makes Bitcoin very appealing to people, because they know that you have a predictable issuance, therefore you have a predictable value curve, therefore you can make investments against that, knowing that no one can go in and inflate that currency to shit, which appears to be happening to every other currency in the world simultaneously in a grand concerted experiment to the bottom. So that's why Bitcoin appeals to libertarians. I think it appeals in general to anti-establishmentarians like myself, simply because regardless of your political affiliation, the fact that Bitcoin is technocratic, scientific, predictable, mathematic currency, it's not up to the whims of any government, but also it's not up to the control of any corporation. It's not up to the control of any individual. It's not up to the control of any group of hippie coders. It's not up to the control of anyone. It is and always will be controlled by the consensus of everyone who is participating in this grand experiment of Bitcoin. And that's what makes it special, because if you can trust and read the code and know how it works, then you can invest in the idea of Bitcoin surviving manipulation. Now, since the introduction of Bitcoin, more than 100 alternative coins have emerged. These so-called altcoins are very, very interesting, because what they represent is the evolutionary environment around Bitcoin, the other species. And within the currency system, every currency is judged effectively by a fitness function. Is it a currency that is useful for everyday transactions? Does it function as a store of value for long-term use? Is it predictable in terms of volatility, so it could be used for somewhat medium-term holdings in terms of investments or capital investments? Does it have large economies backing it, so that you can depend on it having a stable value? Does it have the gross domestic product of a large economy behind it? So all of these characteristics exist in the ecosystem, and every currency, in effect, is judged by that fitness function. Traditional fiat currencies skip that whole thing by establishing a buyer market, because you have to pay your taxes in fiat, and the government buys in fiat. By establishing a legal domain, and by establishing a fixed value. Cryptocurrencies have to compete directly. If nobody likes them, they pick a different cryptocurrency. There's plenty to go for. The cost of transitioning from one cryptocurrency to another is the cost of converting that money into the new cryptocurrency. And because they're very, very fungible, it's very, very low. So with currency exchanges, you'll see charges less than half a percentage point or 50 basis points for transactions directly between virtual currencies. very, very fungible, very easy to exchange. So I said in the beginning, I'm very invested in Bitcoin as a cryptocurrency, but not necessarily Bitcoin. Because if Bitcoin dies, it will be very quickly replaced by something else. When I look at Bitcoin, I see a very similar evolution as we've seen in the area of peer-to-peer networking, which is also very heavily used within Bitcoin. So the first generation of peer-to-peer networking, Napster, suffered from a very fatal flaw. It was a centralized network controlled by a centralized organization, which was a registered corporation. It got sued to hell. The second version, Kazaa, was a centralized corporation with a centralized piece of software, but a decentralized network. It got sued to hell. The third one was a decentralized network with centralized software and a decentralized organizational structure. It was harder to sue. By Nutella, you had a decentralized network with decentralized software and decentralized companies. Now you had to go after individual users. And with BitTorrent, that became even harder to do. So what you had, effectively, was an evolutionary process played out over a period of 12 years in a fascinating effect, whereby the government attacked peer-to-peer systems and helped them evolve into a fitness function of surviving government attacks.
Predatory sense.
Right? And the end result was that the government cultivated BitTorrent and made it an absolutely unstoppable network protocol. Then you have the assistance of governments that really don't give a damn about free speech and, niceties like that. So they started attacking peer-to-peer networks with port filtering and protocol filtering attacks and things like that. So BitTorrent gets encrypted. BitTorrent starts port hopping. I predict that something very similar will happen in the space of Bitcoin. It is extremely easy to set up an alternative coin that solves exactly the problem that Bitcoin is failing at, whatever that may be at the time. And if the problem is big enough to overcome the network effect of Bitcoin, everyone will flock to the new coin. As long as you have a system where you can fungibly convert Bitcoin to this new coin. So cryptocurrencies are here. Cryptocurrencies are going to be part of the financial future of this world. They're going to be tradable commodities. They are an asset class of their own because they're not commodities. They're not strictly currencies. They're not stocks. They really form an asset class of their own. They're here to stay. And yay, Bitcoin. So questions? I am not here to tell you that Bitcoin is a safe investment. Far from it. Bitcoin is not a safe investment. Bitcoin is the first experiment in a global distributed currency. This is stuff that's never happened before. We have no idea how this is going to work out. So if anybody tells you that Bitcoin is a sure bet, they're lying. They're lying blatantly. So I think a lot of the people in Bitcoin have a very palpable sense that they are participating in history. This stuff has never happened before. We've never had a currency that can enable distributed consensus without a third party. We've never had a successful digital currency that doesn't have a sovereign actor behind it. We've never had a currency that can be instantly transmitted across borders without controls. And we've never had a deflationary currency that's deflating not because of a complete collapse in demand, but deflating because of restricted supply. So all of the things that we know or think we know about currencies, we have to rethink. Like, for example, a lot of people say, oh, Bitcoin's deflationary, that's terrible for currencies. Yes, it's terrible for fiat currencies because the reason we've seen deflationary currencies in fiat, or the only deflationary currency we've seen, are ones where there's a complete collapse of demand. Because you can't have a fiat currency deflating. You have unlimited printing capability. Why on earth would you let it deflate unless there's a complete collapse in demand? So the only circumstance under which fiat currency deflates ever is catastrophic collapse in demand. So, is catastrophic collapse in demand a bad thing? Well, yeah, of course it is. that doesn't mean deflation is a bad thing. It means catastrophic collapse in demand is a bad thing, and the only time we've ever seen deflation is under those circumstances. Bitcoin is a very risky investment. I am absolutely hopelessly imprudent with my Bitcoin investment. I am invested way more than I should be. I'm invested professionally, I'm invested with all of my savings, and I'm writing a book. And I've actually got a second book proposal, which is why Bitcoin failed and how we can get the next one right. Because, you know, if it all goes to shit, I've got a book proposal to sort that one too.
Excellent. Are you going to clue us in what the main points of that one are?
So, honestly speaking, I'm invested in 3 different cryptocurrencies. At any period in time, I think I like to have investment in 3 cryptocurrencies. I'm also invested in traditional investment vehicles, although less so. And Bitcoin could very much collapse in value. What I can guarantee for you, no one can confiscate your Bitcoin. No one can steal your Bitcoin. No one can bail in your Bitcoin. No one can bail out your Bitcoin. Right? No one can seize your Bitcoin or forfeit your Bitcoin or inflate it into paper money.
Well, what happened to the customers of Mt. Gox that when they closed it down?
They seized their dollars.
Okay.
They didn't close it down. It's still working quite nicely. It's actually still going.
But I mean, they went after certain customers, right?
No, they went after the fiat currency because when you're a currency regulator and the only tools you have are fiat currency regulating tools, and you're trying to go after Bitcoin, the only thing you can hit is the fiat currency inputs and outputs of Bitcoin. And that's what they hit. But this is really fascinating because here's what happens. You have an exchange.
A little bit of background for people who don't know about the money. I mean, I've heard about it, but I don't know the details.
Mt. Gox is currently by volume about 50% of the traded volume of Bitcoin. It's an exchange that is located in the Shinjuku neighborhood in Tokyo in Japan. And as I said, it represents more than 50% of the trading volume.
Does that
the
mean
next
it implements
big
blockchain? Is that what that means? That it implements a piece of the blockchain?
So, no, actually, in fact, the blockchain is where Bitcoin lives, and that is shared by everyone. Mt. Gox, surprisingly enough, almost all of the Bitcoin transactions are off the blockchain. Until you withdraw Bitcoin from Mt. Gox to spend it, it doesn't exist. It's like fractional reserve. You know, it's paper orders. They don't settle the Bitcoin into the blockchain until you try to withdraw it. Until that time, it's just a holding against your name. Yes, exactly. So Mt. Gox is an exchange. Just like any foreign exchange, you can sell US dollars, euros, yen, and I think about 6 or 7 other national currencies. If you want to buy Bitcoin with US dollars, probably your best bet is to use Coinbase, coinbase.com. Coinbase is a US provider. They're based here in San Francisco, and they will connect directly with ACH to your bank account. You can withdraw money from your check account, buy Bitcoin. Easy peasy. Part of the reason it's difficult to buy Bitcoin is because Bitcoin has a very interesting characteristic you don't see in any other currency. All of the Bitcoin digital transactions are non-reversible. Bitcoin is literally digital gold or digital cash in that if you drop it on the floor and somebody picks it up, it's theirs. If you leave a suitcase full of money out there, cash, you can't go to Cupertino Police Department and say, help me recover my suitcase full of cash, right? It's completely stealable. So Bitcoin is very much the same, right? And that means that transactions can be reversed. If I send Bitcoin to a specific address, it's like teleporting gold. You know, I put it on the transporter pad, I hit the stuff, now it's on the other guy's transporter pad. If they want to send it back, they can. But, you know, there's nothing I can do to get that money back.
There's no authority you can appeal to.
There's no authority to appeal to.
Like a credit card or something.
There's no central third party. Because if there were such a party, that third party is counterparty risk to the recipient of the money. And that's the fundamental problem. Now, just because of the problem of reversibility of digital transactions, 40% of the cost of running Visa and MasterCard and American Express is fraud prevention. That doesn't exist in Bitcoin. It's caveat emptor. You gave them your Bitcoin. You gave them your Bitcoin. You know, if you trust someone else with your Bitcoin, it's your loss. However, with Bitcoin, you can be your own bank, so you don't need to trust any other counterparty. I store 5% of my Bitcoin online. 95% of my Bitcoin I encode with secret keys that are printed on paper, so-called paper wallets, and I store them in a safe. Those Bitcoins don't exist online, cannot be redeemed online, the keys have never been online, they can't be seized, they can't be stolen, they can't be hacked, they're in a piece of paper. And so, yes.
I have a question and or comment with regards to can't be hacked. I know recently there's been some issues with Trojans accessing CG Miner and emptying out people's wallets, and I wanted
Yes.
to know what you were familiar with that, because technically you can be hacked and have your wallet empty.
Not if it's on paper, because...
Not if it's on paper, but if you keep it conventionally, which is, you know, on an online wallet, which a lot of people do, then if you have it on your computer stored locally, then, you know, you can get backdoored. And
Yes, you can get hacked.
Yeah.
So, this is a really key point. Bitcoin opens a whole brave new world of computer hacking. So up to now, if you were a computer hacker and you've compromised a network of machines, a botnet, you can monetize that by making them generate spam. Now you can monetize them by making them mine Bitcoin. And that's a much more direct, much more efficient way of monetizing botnets. And that changes the game for hacking forever. Also, how many of you feel comfortable that your computer is secure enough to store your entire financial net worth? I'm a computer security expert with more than 20 years of computer security experience. I would certainly not put my entire net worth on my computer, and I'm pretty good at keeping it secure. I don't trust it. I have a sticker on my camera. I assume it's compromised. I assume everything I'm doing is monitored, including my passphrases, including my keys and everything like that. So, when I use my Bitcoins, I boot onto a completely brand new machine off a CD. I print paper wallets onto a printer connected with USB completely off the network, and then I transmit those Bitcoins to those keys, and those keys have never been online. That way, I know no matter what, my computer gets hacked, the websites that I use get hacked, my money's safe. And so that's one way. But there are significant problems with Bitcoin. This is still an experiment. If you try to introduce Bitcoin into the common culture with the insecure computers we have today, with the lack of OPSEC, operational security, common computer hygiene, and all of that, it would cause chaos. You can't just take general purpose computers and make them Bitcoin wallets, not unless you know what you're doing. So what we're seeing is gradually this emergence of this whole entire industry for hardware-based Bitcoin wallets that are tamper-proof, that can give you a certain physicality to this digital system. Because at the end of the day, it's much easier to secure physical systems than it is to secure digital systems. So if you can take your Bitcoins, encode them physically, then you can apply physical security. And that's something that we have, you know, experience with. Hundreds of years of experience, thousands of years of experience of applying physical security, not much experience applying digital security. If you look at Bitcoin as money for the internet, you're missing the big picture. Bitcoin is the internet of money. It is a platform, a protocol, a transaction language, and a network that enables a whole series of overlay protocols, APIs, applications, transaction types, novel financial instruments even, to be built on top of this. Imagine a situation where Bitcoin was used as a proof-of-stake reserve currency for more nimble real-time transactional currency, for example. Imagine Bitcoin where you use the transaction language to create escrow transactions or trust fund situations. And you can do that programmatically, right? Rather than doing it through legal instruments, as you do with fiat currencies. In the sense of Bitcoin, you can implement financial instruments programmatically. And that enables all kinds of innovation without prior permission, because you don't need permission to access the network. And so it unleashes the kind of innovation that you saw with the internet because it becomes a platform for enabling money. If you take that platform then and give it to a world where 6.5 billion people have never had financial services, magic stuff happens. The concept of the blockchain allows you to prove that certain activities occurred on or after a certain date in a way that the entire network agrees that they did. It's a distributed, secure timestamp database. And a distributed secure timestamp database hasn't existed before as a computer science algorithmic structure, if you like. It is as big as concepts like eventual consistency or replicated databases or distributed systems. It provides a computer science fundamental structure that allows you to bring a distributed system to using a heartbeat, which in the case of Bitcoin is every 10 minutes, reconverge consensus of the network on a common shared state without a third party. That's a revolutionary computer science invention. And it allows many modes of use other than currency. So for example, one of the things you can do is attestation in the form of a notary. You can do digital notarization of assets. One of the projects I've been working on is paper wallets. And when you're building paper wallets, you're building an instrument that people will encode keys on and will then send money to and will then have to trust 5 years, a decade. You know, this is like the safe deposit box cold storage, right? So it's very important that you trust the code that generated those keys. Very recently in Bitcoin we had a significant security breach. Bitcoin has so far survived all of its security breaches, which is why it's doing so well. But
it was in May, right?
No, this one was like 2 weeks ago.
Oh.
Android has a bug in Java, in a specific module in Java called Secure Random Number Generator. As you can imagine, Secure Random is a rather important library in Java, and if you have a bug in that one, it causes you problems. If you're familiar with random number generation, the biggest problem with random numbers is you never know if a random number is random, right? So if you ask me, generate 5 random numbers, and I said 6, 6, 6, 6, 6. Great. Now, that's a perfectly random sequence. Out of the billion numbers I was going to generate, it just so happened that the first 5 I mentioned were the number 6. You have no way of proving otherwise, right? Random number generator is only as good as you can keep trying it and testing it. So anyway, Android had a horrific mistake whereby it would give you the first random number with 256 bits of entropy, and it would give you the second one with 8 bits of entropy. And that means it's pretty much the same as the first number. And because a transaction signature in Bitcoin is a secret exponent times a random number, if you had 2 signatures in sequence with the same random number, you can figure out the secret exponents. That's bad. With a structure called a Merkle tree. So, a Merkle tree. Merkle tree is named after a guy, his last name was Merkle, M-E-R-K-L-E. He invented the data structure, which is a binary tree where each root node has 2 children. And those children are X or hash. Exclusive, the hashes of the 2 children are exclusive ORed and hashed into the parent. Bottom line, think of a tree where you can summarize entire branches by the parent. So you can roll up a branch. Bitcoin works this way internally, so that when you sign a block with your proof of work, you're not signing every transaction in there. You're signing the root node of the tree. that has 2 children, which are the first 2 transactions, each of which has 2 children, which are the next 2 transactions, et cetera, et cetera. And so the Merkle tree encodes summarizes all of the previous signatures into one. Listen, first of all, if you submit the transaction to them, or if you're on their own network, they're going to see it go out, so then they can verify it immediately. If you don't submit it to them and it has to actually propagate the network until it gets back to them, maybe it takes a few seconds, just like an email, but not more than that. I mean, the propagation time across the entire network is no more than 10 seconds.
I think it's a confusion between confirmation.
Confirmation versus, yeah, okay, so when you create your transaction, it's broadcast to everyone on the network. Now, they can immediately check and see if the keys you're using correspond to a value. What they can't know for sure is whether you've already spent that value. They won't trust that transaction until another block has been mined, 1 confirmation, or 2 blocks have been mined, 2 confirmations, etc. on top of that.
Right.
Because then, in order for you to double spend, you'd have to go back and re-mine those 2 blocks. And because that takes proof of work, and because that proof of work takes 500 terahashes of work to do today, no one individual could do it. In order to remine 2 blocks, you'd have to spend $400 million worth of computing power. Right? So, there's a difference between confirmation and propagation. The propagation of the transaction is instant. Like, as fast as an email, maybe a few seconds across the entire network. It takes 10 minutes for the first confirmation. It takes 60 minutes for full confirmations. Well, guess what? It takes a week for Visa. They can reverse that transaction up to a week. So if you're the merchant, you haven't received that. Visa's confirmed that money, but it's not yours. And it won't be yours until a week later they've confirmed that that person who gave the card hasn't reversed that transaction. If you're a merchant, you hate Visa because a big chunk of your transactions get reversed and canceled, especially if you're a card not present. And you love Bitcoin because they're reversible. So,
do you love Bitcoin?
You love Bitcoin because the transactions are irreversible. You get that money, it's yours.
If you're a merchant.
So it doesn't matter when it's confirmed.
When it's confirmed, what you're saying is
because the person's long gone.
At 0 confirmations, right? All I know is that the network has propagated this message. At 1 confirmations, now I know it would have taken $400 million worth of power to fake that transaction.
But how long did you said it take? How long? 10 minutes?
10 minutes.
10 minutes for the
Well,
first confirmation.
you can't wait 10 minutes to do a transaction.
Yeah. If you've signed the transaction, I can verify that signature instantly. Why? Because I have the whole blockchain. I can't confirm that the entire network will accept that transaction as valid and that you won't try to double spend it until 10 minutes has passed. But I can confirm that you actually had the Bitcoin. That's the difference. I can independently verify that you had the Bitcoin because I can verify your signature, I can verify the outputs. What I can't verify is that you didn't, in the 10 minutes I'm waiting, spend it again.
And you're saying that risk is acceptable for most merchants?
That risk diminishes by $400 million per 10 minutes. Is it acceptable for merchants compared to Visa? Absolutely, because Visa, a week goes by and they reverse your transaction, and then what do you do? I think it's very important to realize that Bitcoin is not competing with perfect. 1 out of every 1,000 $20 bills in your pocket is counterfeit, and you don't care. Because you don't depend on perfect security or even perfect detection. You depend on 1 out of every 100 or 1 out of every 500 retailers applying a UV pen or applying some counterfeit detection mechanism, and through that, gradually withdrawing counterfeit money out of the economy to a level where the overall trust you put into the currency that someone will accept it is good enough. That's how currencies work. They don't work on perfect security. They work on good enough that when I give it to the next person, they're not going to turn around and shoot. So as long as you achieve that level of security, it's good enough. With Bitcoin, we get it sometimes into these theoretical, what would happen if the NSA put $400 million of computing in order to steal your coffee? They would steal your coffee. But there's probably easier ways to do that, and they could do it a lot easier with a counterfeit $20 bill. So we have to compare it to what it's replacing, if you think it is replacing fiat currency. Bitcoin is not anonymous at all.
So give
The
some
opposite.
of the parameters, so why that's the case, and because obviously it appears at least to some extent to be.
So the blockchain is a global ledger. The way it works is that every transaction ever created goes into the blockchain. The blockchain starts in 2009 with a specific transaction that was created by the founder or the creator of Bitcoin. And every single transaction after that is in the blockchain. So if you have a copy of the blockchain, you have every transaction in Bitcoin that has ever happened since August 13th of 2009. You can track from that very first transaction, every single Bitcoin is first created. Its genesis occurs in the block with every new block when it's minted. It doesn't have a serial number, but from that block, that Bitcoin is then sent to the miner who earned it, who then sells it or buys something with it and gives out transactions to everyone else. All of those transactions go into the blockchain. Right now, there are 6.8 million chunks of little Bitcoin coins owned by some 2.5 million Bitcoin addresses. We have no idea who owns each Bitcoin address, but you can track every single Bitcoin through every single step. So if you figure out what my address is, you can then backtrack every Bitcoin I've received, every Bitcoin I've sent, and figure out what transactions I've made. As it stands today, Bitcoin is a privacy nightmare, and we need to fix it before it goes worldwide.
I create an address every time I export Bitcoins out of Coinbase.
You can create an
You can
address
create as many addresses as you
yes.
want, but it's still tied to your bank account ultimately, because Coinbase has got a record of it.
It's tied to the previous address with which you transacted.
Yeah.
So simply by association or taint,
Yeah.
you can associate addresses to each other and basically track them.
The metadata.
It's a fully trackable system. It's all the metadata you would love in order to just completely violate everybody's rights.
But it still relies on establishing the identity at some point. So when you hold a coin, your name is not in the block.
No,
Right.
The address is. So if you associate that address with an identity, then
Right.
you can associate
Right.
all corresponding transactions to that identity.
Right.
So there are two ways around this. The first one is a system of services that exist that are called mixers or mixmasters. And similar to mixmasters on Freenet or email mixmasters in the Cyberpunk mailing list, what they do is they take a whole bunch of Bitcoin inputs, they go, and then they redistribute them out to the outputs, and it messes up the taint. It retaints every Bitcoin with every other Bitcoin until everything's so tainted that the taint is no longer useful. So you throw them all into a big tumbler, and you tumble them with all the other Bitcoins.
Even staggering the time.
Even staggering the time. It's still not good enough. It's nowhere near good enough. We need cryptographically secure remixing, and we need to do it by default, and we need to do it on every transaction, and we need to do it with a new address. Yeah, I mean, and most of the underlying communications on Bitcoin are not encrypted. So the proof of work as a process does two things. One, it creates new Bitcoins. Two, it secures the existing transaction.
Right. Now,
So,
if the Bitcoins are all issued, what is the motivation then to continue the...
yes. So today, every single block comes with a 25 Bitcoin reward, and all of the transactions that are included in that block have a tiny little surplus, which is the transaction fee, or the miner's fee. So basically, when you make a transaction, you say, I'm going to take 1 Bitcoin of mine, and I'm going to give 0.95 to it. Well, there's a 0.05 missing there. That goes to the miner.
Okay.
And by including that little surplus every time in every transaction, right now, if you look at a block, you're going to see that the miner makes 25.125376. The 0.125376 is all of the little fees added up.
Right.
Now, if you imagine a deflationary environment, eventually those fees
Yeah.
will be both meaningful and enough transactions.
Right.
And if not, fewer people will mine. No problem. Difficulty goes down. Network recalculates. the value of mining increases, one of the characteristics of Bitcoin is that none of these things are set in stone. They're all based on feedback loops that are designed to be tight. So it creates efficient markets, not by assuming that feedback won't exist, but by assuming that feedback will exist and making it as fast as possible. So mining hash power will change, and the network will dynamically adapt so that it's always 10 minutes. In fact, we're seeing a shocking increase in hashing power right now. It went from 300 terahashes per second in June to 400 terahashes per second in July. It's 539 terahashes today. It's basically doubled in 2 months. And we're talking, right now Bitcoin is the largest supercomputer in the world.
Is that
By
because,
far.
Is that because people are buying those dedicated processors to
Yes.
mine them?
It can't do anything useful. All it can do is SHA-256, but it can do SHA-256 faster than any computer system in the world.
And that's why if you look at mining profitability calculators, you know, Bitcoin is low. It is not
Yes.
profitable. It's at 50%, where
And that's great. Because
is great if you have a
no
miner.
Even
financial
though they get this
system
ability to-
should be profitable if it works properly. A financial services industry that makes 8% of GDP is proof that it's fucked up and corrupt. Because no financial services industry could extract 8% of GDP as marginal profit if it was working efficiently. It would be much, much lower. They are, honestly, they're not generating enough services.
and also
Food generates services that have tangible value, but not 8% of the economy just for bankers. A Bitcoin transaction involves a transmission fee, which is optional in that if you don't pay it, your transaction will be picked up on a best effort when we can get to it basis. If you pay it, the minimum transaction is half a cent. That transaction can carry a Bitcoin transaction anywhere from 1 Satoshi to $1 billion or more on the same basis. So for half a cent, you can transmit globally 1 Satoshi.
So
$1
that'd be
trillion
on
bucks.
a dollar, that's 0.5%.
On a dollar. On $1 billion is a lot less.
so
Yeah, but
that's-
it's fixed fee. That's the beauty of it.
Yeah.
And it depends on the transaction cost of the transaction. Now, if you try to buy a cup of coffee, this is where it gets interesting. If I'm a business person and I'm a merchant, I understand that Bitcoin is a deflationary currency. Therefore, if you own Bitcoin, you're less likely to buy a cup of coffee than to hold on to that for 5 years and hope that it's worth 1,000 cups of coffee. So, we're in a tug of war because I want to hold that Bitcoin just as much as you want to hold that Bitcoin for 5 years until when it's worth 1,000 cups of coffee. But I also want you to buy a cup of coffee because I own a coffee shop. So, I'm going to start discounting my coffee prices until I reach the sweet spot where my deflationary appetite meets your deflationary aversion, and the discount is just enough to make you buy a damn cup of coffee.
But only for Bitcoins, not for
But only for
dollars.
Bitcoin, yeah. And we've seen this play out again and again. Again, because deflation is not a supply collapse, but it is built into the currency, merchants can deal with that. They can bake it into their pricing, add a discount. It's working out at about 30 to 40% discount. So people are discounting 30% on the dollar, shipping products, and then making up the difference.
Can you explain that?
Currency.
Yeah.
You're saying the
I'm going to
Bitcoin
sell you
versus-
something, and instead of selling it for $20, I'm going to sell it for $12 or $14.
What are the Bitcoin though?
But I'm going to get paid in Bitcoins now, $14,
Because
and then
your
I'm,
Bitcoin is going to go up and
and
down.
then I'm going to hold on to it. And I'm confident that it's going to be worth at least 20 or more. And because I'm giving you a really good discount, you're willing to get $12 value now.
So this is exactly how it would work with gold or even silver and uninflated fiat currency, which
Exactly.
would be receipts for gold.
One difference. You can't infinitely subdivide
Yeah.
Yes.
fiat currency and gold. And you can almost infinitely subdivide Bitcoin. So the complexities and difficulties that come with giving change as the currency continuously deflates go away. So now we're at Bitcoin.
Although you could do that, right? You could
in
say
Ju-
an ounce of gold is 1 unit, and you can do a billionth of unit.
You can't do 100,
But
you
do
can't really do a
of an
billion.
ounce of coin, but you can do it you can do it in calculations. You can do it on calculations. I think
Well,
it's
yeah,
possible.
but,
Just not
but this is
physically.
different. You can do it practically with Bitcoin. I can literally give you 1 Satoshi
Yes, that's right.
right now.
That's right.
And with my phone. And I have that capability just like any other Bitcoin client. So another way to think about this is that traditional fiat currencies have completely separate networks for the transmission of micropayments, milli payments, mini payments, payments, kilo payments, giga payments, mega payments. Those are separate networks. You use SWIFT for giga payments, you use Visa for payments, you use something else for micropayments, although it doesn't really work that way. But the point is that traditional payment systems are specialized to a specific range. Bitcoin goes from pico transaction to giga transaction in the same payment network with the same flat fee. That's never happened before. So the fact that you can actually do that, and the fee is half a cent now, but that's completely market-based. So if the miners start discounting that, if the value of Bitcoin goes up, the fee's going to decline accordingly. So I want to talk a bit very briefly about what I think the key applications of Bitcoin. I haven't mentioned that at all. I think probably the #1 application of Bitcoin is going to be international fund transfer for remittances, international remittances. So Western Union is going the way of Columbia Records. As simple as that.
Western what?
Western Union.
Adapt or die. Co-opt or extinct, basically. So remittances first. I think then offshoring, subcontracting, international payments, import, export, and trade come next. Then interbank transfers.
And the reason you're saying it this way is because
Highest friction
Highest
and
least efficient.
least efficient, highest friction, highest cost, most demand. So if you take it from that perspective, I think remittances is the first. You've got already an existing $115 billion market, which on average gets rates of between 10 and 30% per transaction. And the poorer the country, the worse the fee.
Yes.
So it is a definition of a broken market. And that can be fixed fairly quickly. Now, the other thing that's really nice, I think, is that there's a very interesting balance. You can't really do remittances consistency with a currency because eventually you have a flow imbalance problem. If you keep sending money, Bitcoin, let's say you're converting US dollars to pesos, and you're sending money from the US to Mexico. Okay, so I'm going to convert US to Bitcoin, I'm going to convert Bitcoin to pesos, and give pesos. I can only do that for eventually I'm going to run out of Bitcoin demand to Mexico, right? That's the problem. The problem is that remittances only flow one way. Nobody's sending money back from Mexico, right? Except all of the rich people are trying to flee. So what you do is you balance remittances with capital flight. And so you say, hey, we're the Red Cross of currencies.
Well, aren't they buying?
You're having a crisis? Here comes Bitcoin.
Aren't they buying other things? Food and
In pesos.
whatever else?
They don't have a local market to buy them in Bitcoins. If they did, yes, you could keep a closed economy. But because we're not at the point of having enough volume to have a closed economy, when Jose here sends Maria some pesos in Mexico, they have to be converted from Bitcoin to Mexico to be usable in the local economy. You can't create an inflow without a corresponding outflow. So what you do is you find all of the rich people who have currency controls and bail-ins and confiscatory taxes, and you let them escape with Bitcoin. Now this is already happening in Argentina.
So rich people take their pile of pesos, convert it to Bitcoin, and send it wherever they want them to live.
People who got the remittances take their Bitcoins and get the pesos.
That's right.
Yes, and that way you have some form of balance. Now, if you look at Argentina, for example, Argentina is right on the tipping point. It fulfills the requirements because it has the stringent capital controls, the incredible difficulty in international issues, the very, very corrupt currency and fiscal situation, right? And massive hyperinflation. They've reached the point in currency controls that they've closed some of the last outputs possible. To understand how bad this has gotten, people were buying stock on our Argentine stock market that was commonly listed also on the New York Stock Exchange as a way of converting money to dollars. Buy stock here, sell it on the New York Stock Exchange, and use that to move money out of the country. Obviously, very few people can do that.
People are even buying new cars off the lots in Argentina today.
To stop them.
As a
As a
way
store
of
of value.
savings, yeah.
Yes. Yeah.
Even
So-
though when you drive it off the lot, it drops 20%. or
One of the
something.
Argentinian participants in the Bitcoin conference said, look, in order to understand why Bitcoin is powerful, you have to watch this scene I saw of two 60-plus aged Argentinian men who had no technical expertise exchanging barcodes with their lawyers over a table to do a real estate transaction. Because both of them had their funds outside of the US and there was no way they could convert them, so they did the entire transaction in Bitcoin. And this is people who have no understanding of Bitcoin, but you give them the right incentive. So the reason I think Argentina is on the cusp is because it fulfills the criteria. It has all of these controls, but it also has educated population, ubiquitous availability of internet, ubiquitous availability of electricity, ubiquitous availability of smartphones. Those are the necessary preconditions for a tipping point. So if what happened in Cyprus happens in Argentina in the next year, they're going to shut every single door they can shut. And there will be one door left open, the one they can't shut, Bitcoin.
The one thing you said about the remittances balancing the capital flight, I mean, people are just going to hang on to Bitcoin. I mean, if you live in a world that's going apart so fast, why would you transfer it into any fiat currency?
Because you don't have any disposable income. You're living hand to mouth.
Okay, but
So if you need to buy milk for your kids,
yeah, but I mean, the kind of
You're buying
people that are
milk no
trying
matter
to
what.
get their money out of the country, for the most part, have a lot more money than
Oh
they
yes,
need
them.
to spend.
But the people who are doing the remittances.
Well,
are
that I
getting
understand.
Yeah. So
It's just, but they're going to want to hang on to it as much as possible.
Oh, they
too,
will.
in that environment, because it's going to be inflating. It's deflating. The value of a Bitcoin is going to be going up like crazy as
Right.
this currency crisis unwinds.
So part of the reason why Bitcoin offers a relatively enticing store of value is because if you accept that other people will continue to find it useful, and if you accept that other people who have invested in that value will continue to defend the network existence of Bitcoin, and you only need 2 nodes and someone willing to cash out, then it instantly becomes a more enticing proposition than some currencies. The key here to remember is there are 192 currencies. Ours is the world reserve, and therefore will be the last to topple. And so if you ask an American, is Bitcoin better than the US dollar? The answer is obviously no, and will continue to be no until the very last moment. The last currency where you'll say that, yes, is the US dollar, unless things really go bad. But the point is to remember that there are another 192 currencies in the world, and some of those are the Zimbabwe dollar and the Argentine peso, currencies where literally the intrinsic value of goat shit is greater than the value of your paper money because it burns longer. And I remember this from an interview where someone was asking someone in a Zimbabwe cafe, and they had a stack of Zimbabwean dollars like this, and they were giving them for coffee. And he says, well, if the money's worth so little, why don't you burn it? And he says, because we burn goat dung because it burns longer. And
value of it.
yeah, he had basically expressed the entire monetary policy of the country in one expression. Beautiful. Our money's worth less than goat shit. And so if you consider that from that perspective, so why isn't Zimbabwe adopting Bitcoin? Because they lack the other prerequisites.
They don't have enough internet and enough computing power.
Power,
Electricity.
smartphones.
Even before you get smartphones or internet, it's electricity. So you start with electricity, then you go to internet, then you get to smartphones. And so what we're trying to do is, on the one hand, the world is moving up that scale. On the other hand, Bitcoin is moving down. So now it's possible to use Bitcoin without smartphones. So you can use it with just SMS. Already a company has developed a gateway that connects the Kenyan mobile minutes currency M-Pesa to Bitcoin, so that everyone who has M-Pesa automatically has a corresponding and equivalent Bitcoin account that they can use and transmit instantly without setting up. Brilliant.
And it doesn't require a smartphone, right?
And it doesn't require a smartphone, and
Just
you can do it with
your cell
SMS.
phone.
Do you have to type in the whole key?
No, you use a special PIN number.
Oh,
They hold your account for you.
oh.
Centralized.
It's as centralized as old style banking.
But still part of the Bitcoin decentralized system.
But it's
So-
completely fungible for M-Pesa and completely not subject to currency controls because you can take Bitcoin from Kenya, convert your M-Pesa to Bitcoin, or from Bitcoin, any currency in the world instantly.
To me, it seems, Bitcoin to me, it seems very much like digital gold or some kind
Yes.
of precious metal. And today there's gold, which is a store of value and it can be used as a medium of exchange, etc. But there's also silver and maybe platinum and cars and real estate and maybe fine art and all kinds of different things,
Yes.
right?
Mhm.
Even wheat or whatever.
Right.
So gold is maybe the most, setting aside fiat currency, gold is perhaps the most accepted, but there's a lot of alternatives.
Yes.
And there's exchange values between them,
Yes.
right? And they fluctuate, but it all
Same
works
thing with
together.
altcoins.
So yeah, it'll
There
still,
are exchange rates between them.
right.
And I would, and I think I've said this before, but I do not believe that we will face a world with one cryptocurrency. I think that is unlikely. I think we will either face a world with zero cryptocurrencies, where Bitcoin fails and nothing replaces it, it all gets banned. I think that's extremely unlikely. I think the most likely scenario is we will face a world with 180 plus fiat currencies, plus a handful, 5, 6 solid global cryptocurrencies competing on a global financial system. And so you have Bitcoin, you have Litecoin, which is silver to Bitcoin's gold. Interestingly enough, the creator made a very similar comparison to what you suggested. Faster transactions, just generally lighter. And so yes, there are some very interesting coins. Prime coin is a coin where instead of a proof of work that uses hashing, it uses a proof of work that tries to discover prime numbers, non-Mersenne primes using a polynomial prime sieve something or other. The second one, which is really interesting, is Frycoin. And Frycoin is a Demirage coin, where if you hold on to the coin, it loses value over time. It's a negative interest rate. There's DevCoin and various other charity coins where the percentage of the transactions go either to the developers or to named charities or to named organizations. So essentially there's a built-in fee and funding scheme. Essentially Bitcoin is an IPO for the funders, right? The founders. One of the predictions I've made is if Bitcoin works, Satoshi will be the world's first trillionaire. By definition.
Nobody knows who he is, right?
And not just Satoshi, but several other participants in Bitcoin will become the first trillionaires, and that makes sense. So yeah, there are other altcoins, and I totally imagine a world where, in fact, Bitcoin isn't really very good at transactional stuff. So I think it's probably better as a store of value, because it's highly deflationary. That has advantages for store of value, but I think it has some disadvantages for transactional economies. I wouldn't be at all surprised if you have a very, very lightweight coin that's used for transactional day-to-day, which is backed as its commodity by proof of stake in Bitcoin. So you own Bitcoin, you use Bitcoin to prove stake to mine the new coin. So anyone who owns the old coin is by definition a mint for the new coin, or you have a one-to-one exchange or something like that.
And I wanted to point this out too. I like how he's saying he foresees so many currencies. What I foresee is a little different than that. I think a lot of the color coin idea, and I can imagine a system in the near future where not only do we have X amount of cryptocurrencies that are pure currencies that maybe derive their value from blockchain or other tasks that they perform for you or benefits, but a complete transition from the stock market to the blockchain of all companies' stocks and shares. Mm-hmm. And that could be a situation where we've reached a point where you can actually request somebody pay you in GM stock, say if you wanted to lose all your money. Give me GM stock so it can be devalued. But you really,
stock has currency.
Right. You can actually, and well, I think this kind of demonstrates the superiority of cryptocurrency and Bitcoin in general. Is you could actually, in the future here, accept a currency that is backed by gold and transmitted through the Bitcoin blockchain by a
Yeah.
colored coin.
Yeah.
So-
You can assign coins to specific weights of verified gold ownership. Yes. Yeah. You can do a reserve-backed currency again if you wanted to.
But it actually lets the blockchain be the ledger where
Yeah.
everything is valued on it.
I would say Bitcoin today is backed by silicon at the very basic level, because the fundamental way by which Bitcoin is created is through computation that requires either general purpose computers or special purpose silicon. So if you have silicon, you have Bitcoin. So that's the process, and that is scarce. It has a predictable rate of development, Moore's law, and is universal. So it's not a bad way to back a currency.
You
Essentially, the internet is backing Bitcoin.
You
through its
talked about it
computation.
not being a safe investment.
Yeah.
You were very emphatic about that. I brought up some things that I'm concerned about. You said, now those aren't a problem.
Yeah.
What is a problem?
What is a problem?
Oh, there's a couple of problems. The first one is that I expect the regulatory environment to get hairy, either over the short term, over the medium term, or both. So, look, if you have a currency that can be manipulated, someone's made a lot of money manipulating that currency. They're not about to let you go off and play with your own little global currency that can't be manipulated. So there's that. Then there's the kind of knee-jerk reaction you get from most lawmakers. So it's, Bitcoin can buy drugs. Well,
Cash can't.
yes, of course it can buy drugs. Otherwise, it wouldn't be very good money, would it? It wouldn't have very transactional utility if you can't even buy drugs with it. I mean, that's kind of one of the main commodities in this world. So, Bitcoin can buy drugs far less efficiently than you can buy them with dollars. And if you buy drugs with Bitcoin, you'll be adding a tiny little Bitcoin on the mountain of dollars that were used to plant, harvest, collect, process, distribute, deliver, and possibly roll up and snort up your nose these specific drugs. So the problem is that a lot of the regulators are reacting to Bitcoin in exactly the way they reacted to the internet. Which is, this is new, this is weird, this is not under our control, therefore it must be bad. Terrorists, pedophiles, whatever. List, add, whatever the list is. There's a beautiful cartoon for Bitcoin where there's this guy who's holding a box that says Bitcoin on the front, and there's a guy dressed like Uncle Sam that has regulators on the front of his shirt in the store, and it says, well, how would you like me to wrap this? And he's got this wrapping paper behind it, says terrorism, child pornography. So there's a very big risk that the US government or any other government will start intervening. I think that's probably a lesser risk. I think there's a risk that we have some serious bugs that have not yet been discovered that are going to completely fuck up the network. There's a risk that that, together with some other unexpected events, will cause a complete lack of confidence. And it all blows up. Or the people react, look, quite honestly, if tomorrow morning someone blew up a public building and they'd financed, the taxi cab to that with Bitcoin, next morning, USA Today, Bitcoin finances terrorism. So that's the kind of risks I'm worried about. They're not real, practical, fundamental problems with the value of Bitcoin. They're all external political influences. But if that happens to Bitcoin, it's going to slow it down in the US and only in the US, and it's going to continue to march on in the rest of the world. There's no way you can stop Bitcoin entirely.
I would say it's going to speed it up in the rest of the world. Because the more the US abuses its reserve currency, the more attractive Bitcoin becomes everywhere else.
Yeah, I was telling Ed
what's happening.
earlier that the week before delivering this presentation at Surviving and Triumphing Over the Crisis of Socialism, I was doing a series of seminars for Russia Today, the TV station, who are very gung-ho about Bitcoin. Really? And I've been invited by Chinese media to do presentations for them, who are also very gung-ho about Bitcoin. So
Why?
why? Because it stick in the eye of the U.S. Because if you're China, you look at this and you say, well, Bitcoin might be a reserve currency that nobody controls, but the one that we have right now is one that our enemy controls. I'd rather have one that nobody controls.
Even though they don't control it.
Even though they don't control it. Yeah, because it's a tremendous advantage to control your world reserve currency.
Did you or anybody, were they able to look into who is actually running up the price, you know, the big demanders after Cyprus?
It's far too complex a
It's
market.
all a guess then.
There
It's
were
a
the
completely
downloads.
global, 24-hour, very liquid market. So it's extremely difficult to track. And there aren't even the analytical tools to track it right now. So I would say if you hear predictions or even analysis of Bitcoin markets, take it with a huge grain of salt. You know, first of all, it's coming from the same people who didn't see the last one coming. And secondly, they're doing that on a currency where they don't have the necessary tools or historical experience. So they have no idea.
I saw, you know, a bunch of articles say, oh, it's the Russians who had the money in Cyprus who dribbled it up because...
Maybe.
You know,
Yeah.
but how do they know, right? They don't.
No, they don't. They don't.
There
But-
was, there is a certain way you can kind of tell where downloads are happening from certain apps on a phone. I
On
think that's-
SourceForge, they keep download statistics by country, and we saw huge spikes of downloads in Cyprus. We saw recently huge spikes in downloads from China. China did a 1.5-hour documentary on Bitcoin that ran on the official TV stations for 2 weeks. And you do not get a 1.5-hour documentary unless it's been approved at the highest levels. So it's clear that both Russia and China are now backing Bitcoin from a national interest perspective, or at least from a let's find something to annoy the U.S. perspective. Either way, it works for me.
So if we get heavily involved in Bitcoin, might we be aiding the enemy?
Well, if the enemy is the
Enemy.
American people, yeah, absolutely,
Enemy.
you're aiding the enemy. I hope to aid the American people as much as possible.
Andreas,
You've got
thank
my
you.
business cards.
Make sure you pass it. Yeah.
Sorry? Thanks for feeding me. Appreciate it.
Hope you enjoyed it.